today we're gonna be doing three pairs. We're gonna start with the FX news first. We just want to see what was going on, what's gonna be happening next week in terms of the news. If there's any major high impact news that's gonna be probably affecting how the market moves for next week, we have to check that because that's very important. And then we're gonna go ahead and check DXY, which is the currency that basically measures USD, and then it can give us in terms of how strong USD is and what we can expect for next week. So what I do first is I go to my FX book and I check any high impact or any medium news that we might think that might affect the market for next week. So here, a few minutes ago, there was a high impact news that came up from AUD. It moved the market for a little bit and then it rejected. So here's what happened today over here. So for tomorrow, this is what we're expecting for tomorrow, isn't it, right? All right. So Euro, we're expecting low impact news. That's not much, nothing very important. CHF, we're kind of expecting like, some type of medium news, not very much. I don't really worry about the medium or the low impact. I worry about the high impact news. So we don't have any high impact news that we think might affect the market for tomorrow. So now let's go ahead and go back to the chart. We're going to start with DXY. Can you guys hear me very much? Is my voice clear? Let me get some yes. Yes. All right. Beautiful. That's beautiful. All right. Now let's get going. All right. So here we have DXY. DXY is the currency that measures USD. It basically tells us how strong USD is. As far as we know, if USD is strong, anything that goes with USD basically goes to bearish. Let's see, like, for example, if GBPUSD is what we're looking at and USD is stronger, then we're expecting GBPUSD to sell off. And if USD is weak or DXY is weaker, then we're expecting for GBPUSD to basically be bullish, all right? So first of all, we're going to go to the weekly time frame and check what's going on here with DXY, all right? So with DXY, we can see that it's kind of bearish all the way down. Like, first of all, we have this high, and then we have a high, low, high, low, high, low, and then high, low, and then we have our last high right there, okay? So after that, we ended up getting some type of change of character somewhere here on the weekly time frame. It is very important to check the market on, overall direction of the market on the higher time frame so that you can get the bigger picture. The higher time frame is more important than the lower time frame because it gives us broad, knowledge of what's going on the higher time frame. Then when we go to the lower time frame, we can basically make a decision on what we need to do. So on the higher time frame weekly, DXY gave us some type of change of character. I think this is around November 7th of 2022. So it's been almost November 7th of 2022. So it's been a while ago, basically. It's been a while ago. Okay. And then after that, the market started going bearish. So we have a high, and then we have a lower low, then we have a lower high, and then we have a lower low, and then we have a lower high, and then we have a lower low, and then we have a price going a little bit above this area, taking out this inducement here, or liquidity. There's a little bit difference with liquidity and inducement. Inducement is basically when the market makers or the banks or the big players, when they create some type of fake move in order to induce or entice the rest of the retail traders so that they think the market is going a certain direction, but then they trap them and then they drive the market to the opposite direction. So here we have a liquidity on this is around March 6th of 2023. Market just was basically creating lower highs, lower lows, and then it created this area of liquidity / inducement. It went up, take it out, and then it reversed from this area of a little bit of imbalance going on over here if you go to the lower time frame. And then after that, the market with DXY started going down. Let me just go back a little bit. All right. So DXY started going down, and then the last break of structure that we have is this area of break of structure on the weekly time frame. And then after that, the market was trending from this lower high to this lower low, because this entire thing is just the entire move that broke this entire structure over here. So we have a move coming from here, and then breaking this structure and then creating a lower low. So this tells us that we are in a bearish momentum. All right. So in this time frame, pretty much we can see that DXY now is trading around this area of supply zone. Market broke this structure currently, came down, took out this area of inducement. And how do we decide if an area of inducement is actual or not? So basically what we look at is we look at the candles, okay? To define an inducement or liquidity, the downtrend market candles has to trade, above the previous high of the candle. Or when it is the market is uptrend, it has to trade below. And so this is what happens, okay? Let's say if we trade that downtrend here, okay? The previous candle, the new candle here, the bullish candle has to trade above this bearish candle here in order to identify this as a pullback, okay? And then for a downtrend, a candle has to trade below, for a downtrend, the candle has to trade the high, above the high of the previous candle. And then for an uptrend, sorry guys, it has to trade below the low of the candle. All right, anyways, so now we have a actual valid inducement right here. Remember, what's going on here is basically most traders, this is what they think, okay? They think the market is going to go up and then reverse from here. But in case of that, the banks, what they do is they drive the price up and then they kind of reverse from a higher time frame or whatever it is, supply area, and then to continue the price to the downside. So now the price is rejecting this area of supply. Give me 1 second. Let me just clear this up real quick. I don't know what's going on here. Give me 1 second. Okay, now I'm good. Okay, now I'm good. All right, so we have an area of inducement. Price is now trading around this area of supply zone on the weekly time frame. Very important. So once you build your story on the higher time frame, you kind of get like confidence of what's going on the lower time frame. So this is very important. And then we can go to the daily time frame and refine this area, okay? Once we mark our area of supply zone on the higher time frame, then we have to go to the lower time frame like the daily to refine it, and then we're going to continue going down until we get a beautiful, clean area, okay? So over here, we can see that this is an area of shadow that's not even mitigated yet. This area of shadow, the price did not touch this area yet, so this entire area is not mitigated pretty much. You can see that. Okay, so on the daily time frame now, this is what the price is doing, okay? The price is basically creating a high highs, high lows towards the supply zone on the weekly time frame. We have a price creating low, and then high, and then high low, high, then high low, and then we have this straight move all the way until here, and then high, and then high low, and now we have a high. So why do I say this is an entire move? Basically, the reason why I say that is because all these bearish candles are not trading below the low of the previous candle. For an uptrend to create a pullback, these candles here, a candle has to trade below the previous low, and then we can consider that as a pullback. But if it doesn't do that, then we don't have a pullback yet. Do you see what I'm saying? Are you guys on the same page, guys? Let me get some engagement. Let me get some yes.
Yes, sir. Yes, sir.
All right, we got that. So on the daily time frame, we see the price trading towards the supply zone and then creating high highs, high lows, facing towards the direction of the higher time frame. So now price is aligning, and now we have a rejection, and we have a doji, which is an indecision candle around the supply zone on the higher time frame. Now we're going to go ahead and go to the 4-hour time frame. So this is basically how we do multi-time analysis. This is very important, okay? Very important. All right. In this case, we can see price created high low, high on the 4-hour time frame, and then we have a valid high low, and then now we have a higher high here, and then we have a higher low, and then we have a candle trading higher high here. Let me clean this up real quick. It's kind of a little bit messy. All right. Delete this. So we have price creating a high low right here, and then giving us a higher high right here, and then higher low, and then a higher high. And the reason why I call this a higher low is because this bearish candle here traded below the previous candle low here. So this makes us consider this as a higher low area. So now we're going to go to the 1 hour time frame, and what we're looking for is we're looking for a change of character around this area of supply zone on the higher time frame. Let me close this quickly. All right. So now what we're looking for is we're looking for a change of character around this area, okay? We are still bullish when it comes to, according to the higher time frame, and the lower time frame is both corresponding and telling us that DXY is basically at a supply zone on a higher time frame, but the price still did not give us a change of character. So therefore, we don't have any, we cannot say this is a bearish yet. So we have to break this area of higher low in order to consider this a valid downtrend. So the price has to do this, and it has to go back, trade around, take out this area of liquidity or inducement, and then price continue to the downside. And then we can call this area a change of character on the 1 hour time frame or the 15-minute time frame. So now we consider that DXY is still bullish, but trading around a supply zone on the higher time frame, all right? On the higher time frame. And now price, as we can see right here, is kind of like indecision. We don't see any movements. Price is basically trading and up and down, creating resistance and a support at the same time. So you can see it here. We have an area of support and resistance, and then we have an area of support right there. So price is basically trading around this area. It might come all the way down here, fill this gap, which is this entire shadow here, and then go back a little bit, and then create a change of characters. That's what might happen. That's what we think might happen with the DXY, but our bias is DXY is still bullish. So now we're gonna go ahead and check out one of the major ones. So what do you guys suggest? Should I check the JBY, GBPUSD, or because since we checked the DXY already, it's better if we check anything that correlates. I mean, anything that goes with USD, like EURUSD, USD JBY, GBPUSD. All these pairs that go with the USD is the ones that we can check today. Okay. And the reason why I say that is because we already checked DXY, and DXY is what measures the strength of the USD. So let me know what you guys want to check next, please. Let me get some writing here.
GBP USD.
All right. So I see some guys saying GBPUSD. All right, brother. Let me go ahead and check out GBPUSD real quick. So as usual, we're going to check on the higher time frame. We're going to start with the higher time frame because we want to get the bigger picture of what's happening on the higher time frame, and then we can go ahead and decide exactly what's going on the lower time frame. Without the higher time frame, we don't know what's going on, guys. Okay. So this is very important again. So on the higher time frame, first of all, we have a price creating here, lower highs, lower lows all the way. And then we have a change of character somewhere here. And why do I call this a change of character? Anybody can tell me? Can anybody tell me why I call this? And give me some, okay, let me, you can,
Does it
you can go ahead.
Lower high?
Yeah, you can go ahead and unmute yourself. So go ahead. Yeah, guys. So why do I call this a change of character, guys, on the weekly time frame? Sorry, go ahead. Look at it very clearly.
Because it's a high?
Yes. So the price was basically trading from this lower high to this lower low. And then we have a bullish candle trading above the high of the previous high candle. Okay. So we can see that this candle, this bullish candle here traded above this high. So this is a valid pullback. And then we have price going from this area of lower high and then creating a lower low. This lower high and then creating a lower low. So that's why I consider this a change of character on the weekly time frame. Very important. In order to consider a pullback, it has to trade below or above for an uptrend and for a downtrend, and then below for an uptrend. Very awesome. Okay, after that we have a price on the weekly time frame creating one strong bullish momentum all the way up from here to here. We have one strong move. This is just a internal structure or internal and lower high, and this might be used as an inducement or a liquidity, but the overall change of character is going to be right here. So this one here It's just what you call an internal structure. So the price is basically internally creating. So this is the area, if you can, if I can go ahead and say this is the area that created. This is the area that created the break of structure here, or the change of character here. So the price pushed from here, created one big momentum. So when you look at the size of this candle, this cannot be a retail trader, or this cannot be a dumb money or small money. This is a big money that's creating this push here. It takes a ton of volume to create this type of movement, okay? So price now created internal high low and then pushed the price to the upside, now creating a change of character, which is a reversal on the higher time frame. Great. And then we have the price creating, basically consolidating around this area and then going down, taking out this area of inducement. And then what happens after that is, guys, this is exactly what's going on, okay? When a price does not create a displacement or a move, and then it kind of rejects and creates a liquidity, usually the big players, they target that area. So this is the area here that created this liquidity grab here, okay? So it wasn't able to break this internal low, so therefore it kind of go down and then took out the liquidity, and then after that it reversed from this area, okay? This area of what do you call a mini supply demand zone right here, okay? It came back over here, took out this area, and then reversed right away. So if you go to the daily time frame, you can see a fully loaded demand zone right here. So now we have price still trading, but we're waiting for an inducement to be taken out so that the price can come all the way down here, and take reverse from this area of structures. But what we have here is we have price being an uptrend. Okay, we have a price trading from here to here, and then from this higher low to this higher high, and then we have this higher low to this high high. This is an entire move, and the reason why I call this entire move is because this pullback is not valid, and the reason why I say it's not valid is because you guys already know, if you watched my pullback video, because it did not trade below this candle here. So this is what we call an inside bars or an internal candles. So therefore it did not have the power to break the low of this beautiful bullish candle here. So we have one move going from here to there, and then we're waiting for an inducement to be taken out. What we think is our inducement will be somewhere here, right there. Remember, price before it reverses, it has to, before the price reverses from a demand zone or a supply zone, it has to create inducement, and it has to take out liquidity. Very important. So now what we expect on the, go ahead.
For back to the whole pullback on that candle, the inside bar, does it have to break the body of the candle or the wick as well?
It doesn't matter. It doesn't matter. It could break the wick, and it could also break the body. So it has to, for it to be valid, it has to break the entire candle here, which is the wick, all the way down here. Because remember, the wick is a price itself. A lot of people ignore the wicks, but the wicks also tell us something. It's also a price that was rejected. So basically, the candlestick opened over here, and then it basically manipulated this area, and then went up distributing, and then creating a high, and then closed over here. So for the basic is, this is the open of the candle, let's say, okay? Let's just say here, this is the open of the candle, okay? And this is the, what do you call, the low of the candle. This is the close of the candle, and this is the high of the candle. Remember, when the candle opens, this is what it does, okay? It creates some type of sideways here, and then it basically manipulates this entire area, and then price goes up to distribute, and then closes around this area, and then price rejects it, and then creates another area of consolidation again, so that it can continue manipulating, because manipulation is very important in the market, because there has to be a liquidity that's been taken out or liquidated in order for the price to move. So when you can see this area, this is the low, the open, the close, and the high. So these candles here did not trade below the low of this candle. So therefore, we cannot consider this a pullback, and we're gonna go ahead and consider this entire an entire move or impulsive rather than calling it a pullback. Is that the question that you had?
Yeah, hell yeah. Thank you.
All right, you're welcome. So, and then you can use this information even on the lower time frame. If you're scalping, if you are basically intraday trading, if you're swinging, you can still use this information on any time frame. Okay, to consider a pullback, you can use this information on any time frame. All right, because market structure is very important. Now remember the price. This is what the price does. Three things. Okay, price. You have to identify the market structure first, which is bullish or bearish, and then you have to go ahead and identify area of liquidity, because price is always targeting an area of liquidity, and then price goes back to an imbalance to continue. So structure, liquidity, back to imbalance. That's exactly what price does all the time. Even when the candle opens, that's exactly what it does. Like this one right here, you can see that, price opened over here. It created a manipulation, liquidated, and then distributed it, and then went all the way up, creating a high, and then came back, rejected again, and then creating a sideways market again. So now we have this entire move, and then we have a break of a structure, which is right here. So this is our last break of structure on the weekly time frame for GBP USD. This is why it's always good to only trade one pair. 1 to 2 pairs maximum is very important. And instead of focusing entire, currencies, it's always good to pick 1 or 2 and then master those 2. Even if you are a good trader, it's always good to trade 1 or 2 so that you don't waste your time when you are analyzing the market, because it takes a long time to analyze and to put things into perspective. You see what I'm saying? All right. Okay. So guys, now we have a low, created a high. All right. So what price can do now is, now we can see this area is price basically trading one entire move again. Okay. Price can come all the way down here and then use this as a inducement. Okay. Price can take this as an inducement instead of, price just, reversing from here. What a lot of people think is like, they think this is going to be a valid higher low, because of course it's a higher low, but price is not going to move that perfectly. It's not going to come over here and then move from here and then create a high right away. So what price is going to do is it's going to come over here, create some type of like fake move, and then people will think that the price is going to reverse from here later on, and then it's going to take this area of inducement and then go all the way down here, probably react around this area of what do you call a higher time frame demand zone. Okay, and then reverse from here. Or it can create something like this and then go down to the higher time frame, demand zone again, and then continue to the upside before it reverses. Okay. So now what we're going to do is, on the higher time frame, we have price creating bullish momentum. Now we're going to go to the daily time frame. Okay, what do we have on the daily time frame is we have something on the daily time frame. We have price trading around an inducement. Like this is what I said exactly. Okay, what happened over here? You can see the guys, the price created a break of structure, creating high, and then creating a higher low. But most of the time, the first higher low is always used as an inducement, because it is very obvious. I mean, if this is how easy the market is, anybody would be very profitable. But you see what I'm saying? So the price cannot just reverse from this area right away. It's not going to reverse from here. It's going to manipulate this area, and then it's going to reverse from area of demand, which has an imbalance, and then strength. Strength and imbalance is very important. So before the break of this structure, this is the area that pushed the price to the upside before the break of this structure on the weekly time frame. Before we break this structure, this was the area of demand that created this entire move. So how many days do we have here? We have 1, 2, 3, 4 days straight up. Price going up and up, creating high highs, high lows if you go to the lower time frame. So this is an entire move, entire bullish momentum before the break of this previous high here. So this area is very important. Now we're going to go ahead and mark this area. You see how the price reacted right away around this area? But when we go to the lower time frame, we're going to refine it, okay? So we're going to refine this area anyways. So price already took out this area of inducement. We can see that. And if it even closed below it. So this area of inducement is already taken out. Now we're going to go to the 4-hour time frame because we're trying to refine this area of demand. And the reason why we refine is because we want to get the best risk to reward ratio. Otherwise, if you enter a trade here, your stop loss is going to be really, really, really wide. If you, let's say, if you enter a trade here like impulsively, your stop loss is going to be 133 pips, and you don't want that unless you are a swing trader. So now we're going to go to the 4-hour time frame, and what we're looking for is we want to refine this area, and we want to know what this current price is doing around this area of demand zone, okay? So if you go all the way down here, we have an area that we think the price might reverse, okay? And the reason why I say that is because, first of all, this area broke this structure, and then we have another break of a structure here, and then we have a break, the major break of a structure after the price started, continuing to the upside. So here is very important. As a demand zone, that's a very important area. So now what we're going to be doing here is we want to analyze this current price here. So we have a high, low, high, and then low. We have a high again, but then we have a lower low, and then we have a lower high, and then we have a lower low. All right, good. So this is our last break of a structure. If you guys can see it very much, price for some reason few times it kind of traded below this area, taking out this area of liquidity, and then went up, reversed from this area of demand supply zone again before it broke the entire structure. Okay, before it broke this entire structure, it went back to trade around this area of supply zone, and then it continued to the downside. So now, according to what's going on right here, we have a break of a structure right there. Let me clean this up. So we have a break of a structure right here. Analyzing the current price is also very important, guys, okay? So over here we have a break of a structure. This is our last break of a structure, and then price just kind of creating a pullback. As we can see, price has to create some type of liquidity, which it did already, or inducement. So this area is an inducement area, and the reason why I say that is because price already traded below this area. And how can we find out? We can go to the 1-hour time frame in order to get the full picture. Okay, if you go to the 1-hour time frame, you can see price traded below this area. So this is a valid pullback. Price came all the way up, all the way down, and then went up, and then traded below this low here, and now price is going back to basically take out this inducement. All right, this is going to be our inducement here. What we're expecting is we want price to basically take this area. And once it takes that area, we want to see the area that we think has an imbalance. Okay, if you look at here, let me see if this area has an imbalance. So we have an area of imbalance right there. Do you see the guys? We have an area of imbalance, which can be our supply zone. Once the price returns around this area, it can continue to the downside. So once it returns over here, it can continue to the downside until it reaches this area of this area of higher time frame demand zone, from this supply to this demand. Okay, so what we're expecting with GBP USD is we need the price to continue to the upside, to take out this area. But once you get to this zone, which is an unmitigated shadow here, it might react to it. Okay, it might do some type of reaction, like price can just go up and then react a little bit, create some type of fake move, and then go up to clear all this area of inducement / liquidity. Okay, so now we're expecting for the price to continue to the upside. We're not going to be looking for any we're not going to be selling this market until we see the price reach this area. Sorry, we're not going to be selling this market until we see the price reach this area. Make sure you take a screenshot and save this, because we want to see and we want to analyze how the market reacted around these zones next week. Okay, we have low, we have high, low, high, lower low, and now we have the price going up, creating like mini high low, and then high, and then it's going to continue until probably takes out this area and then reverse from this area here. Okay, so our main target for GBUSD right now is going to be, we're looking for a sell position around this zone. Once the price reaches over here, we're looking for a sell position. So just keep that in mind. Don't be selling right now, because price is not ready to be sold right now, because the price is still trading within this big move, big candle over here. Until the price takes out this zone, don't even look for anything, okay? Usually Mondays I don't trade because there's not a lot of volume on Mondays. The market is basically feeling the gaps that it created on Fridays, and creating a lot of correction, a lot of consolidation. So usually I don't trade on Mondays unless there is a high volume, okay? So I usually trade Tuesdays until Fridays, and I don't trade on Mondays. So do not be trying to take a trade around this area, because this area is going to be probably manipulated, in my opinion, according to my strategy. All right, what else you guys suggest that I check? One more.
EUR USD, please.
All right.
Go.
All right. You guys agree with that, EURUSD?
Yeah.
All right, let's do it.
Yep.
All right, EURUSD. With the EURUSD, we're going to start with a weekly time frame as usual. We want to get the bigger picture before we jump into the lower time frame, because bigger picture is very important to us. First of all, we have the price was plumbing to the downside, creating a clear and concise lower highs and lower lows all the way down here. So this was a beautiful move to the downside, and then on the higher time frame it broke this area of low, and then continue to the downside. Okay, continue to the downside, and this was the inducement that price created at first before it reversed from this reaction here. So now we have let's say we have a lower high, lower low, lower high, lower low, lower high, and then we have our last lower low right here. So once we get the last lower low on EURUSD, we can go ahead and create and mark this as a change of character. And the reason why I call this a change of character is because we can see that price traded below this area and then closed and then went up and then created lower high, led to a lower low, breaking this structure here. So this was our last lower high, led to lower low before the break of this structure. So therefore, this is going to be our change of character on the weekly time frame for Euro USD. All right, and then after that, what we have is we have price creating higher highs, higher lows. We have price creating higher highs, higher lows, higher highs again, and then higher lows, and then we have price creating a higher high. But remember, overall direction of the price on the higher time frame is still bearish, but we need to see some type of change of character on the lower time frame. Until then, we are buying this market. Okay, guys? All right, now let me go to the before I go to the daily time frame, let me go ahead and mark this area break, this break of a structure here. This break of a structure on the weekly time frame. This is our last break of a structure on the weekly time frame. Price went up, created an inducement, and then went all the way up. Okay, so what else we have is we have the price basically trading below this area of inducement. Inducement is already taken out on the weekly time frame, very important. Now let's go to the daily time frame, and we're looking for an area of demand that has enough imbalance in order for the market to continue to the upside, okay, until it reverses later on. So on the daily time frame, we can see price creating an intolerant structure, which is an inducement, and then creating a big push about 1, 2, 3, 4, 5, 6 days straight up, and then breaking this structure. So price has been going up for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days before it broke this structure. So 9 days after that, prices continue to the upside and then continue to the downside again. So this is not a change of character for the newbies who are new to the SMC strategy. This is not a change of character yet. A change of character can only be here. If price trades below this area, then we can consider this a change of character. Until then, we don't have any change of character. So price has to come all the way down here and trade below the previous high low that created this high in order to consider this a change of character. Until then, we are looking for a buy position. So we don't see things that are very clear over here because we're looking for an area of demand zone that's very clear. Now let's go to the 4-hour time frame, because we're looking for an imbalance and a refined supply demand zone. Okay, so after taking out this inducement, price still continuing to the downside, creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, breaking this structure here. So price is try to continue until it finds an area of demand zone that's basically valid. Okay, this area is already mitigated. We can see that price went up, came back to it, and then traded from it. This area here is not, I think it's also mitigated right here. You can see that. So price might reverse from this area if it creates a change of character. And then how we can find out, we can go to the lower time frame and find out. So we have one demand zone here with enough imbalance, because the high and the low of these candles, there's enough area that the price might end up reversing from here in order to continue to the upside. Okay, and then we have another area of demand that we think price might end up reaching before it reverses and continues to the upside. So this area is also very important because it has enough imbalance between the high and the low, and then between the high and the low of this area. So we have enough area of imbalance here too. Okay, so now what we're going to be doing is we want to monitor this current price in order to decide if we're going to be buying or selling from here going forward. So what do we see here? This current price is very important. We know what's going on the overall direction, which is a bullish momentum, and we had a change of character on the weekly time frame, but we want to know when price will reverse before it continues to the upside. A lot of you guys have been asking me this question because it's going to take a long time to wait for what's happening on the weekly time frame. It takes months and months and months. So you got to be able to trade these moves here on the lower time frame until it basically comes to a valid demand zone on the higher time frame. So here we can see price is basically creating high, low, lower high, lower low, lower high, and then creating a lower low. All right. Here we have a valid demand zone. And why do I call it a valid demand zone? I'll tell you why, guys. We have a little bit of imbalance over here. The 1 hour is going to tell us. So now let me go to the 1 hour time frame. Remember, the price is tapping on a higher time frame demand zone already, but we're looking for some type of change of character in order to continue the price to the upside. And I think we already have a change of character, a minor change of character, or that can be used as an inducement here. Okay, we have a minor change of character here. So price is giving us some sign of reversal on the 1 hour time frame. All right. So this area of inducement is already taken out, and it might be our change of character, because inducement can turn into a change of character if price reaches an area of supply zone or demand zone on the higher time frame. All right, so now let's go to the 15-minute time frame. Remember, we're monitoring the current price in order to make a decision of what we'll do next. So we can see the price was basically plumbing, breaking this structure, coming down here, and then creating a lower high, and then creating all the way, going all the way down here, lower low, and then lower high, and then lower low, and then lower high, and then lower low here. So this can be our change of character on the 15-minute time frame. All right, for those who traded on Friday, they probably took advantage of this because price basically reversed. I did not trade and Euro USD on Friday. I don't usually trade Euro USD, but anybody that traded it, there was a great opportunity over here. That was about, let me see, and this is not something that you wanted to wait for a confirmation. You can go ahead and enter this impulsively and put your stop loss below this area, and it's not going to be that bad. So this was 46 pips of move that happened over here, I think on Friday. Okay, August 23rd, Friday at 10:45 a.m. around New York session. So anybody that traded that day probably took advantage. And why do I call this a valid area? Because you can see price creating a higher high, higher low, higher high, and then price taking out this area of inducement right here. Okay, price taking out this area of inducement. After it created a higher high, it came down to take this area of inducement, going crazy, and then coming down to a demand zone on the lower time frame change after the change of character right here, and then price end up reversing. But right now, what we're looking for is we cannot trade around this area. We're looking for the price to break this area first. Okay, we're looking for the price to continue to the upside, break this area, and then come down to this area again, because we have a shadow that's not even mitigated yet around this area here. And then we can go ahead and buy from here to target, the higher time frame area of we can target this area of a higher time frame, but we have to wait for the price to give us this type of move, take out all this liquidity, come back over here probably tomorrow morning around Eastern time, New York. Okay, so we're expecting a bullish momentum for Euro USD, which is telling us that the higher time frame on the weekly and the lower time frame is basically both correlating. Okay, on the weekly time frame we have a bullish momentum, and on the 15-minute time frame we have a bullish momentum. So they are both working hand in hand and giving us the direction that we really need. So we have a change of character, up move, inducement taken out, price reverse here from this area of demand zone on Friday, and then now price is trading from this area to this area. So we're not going to be taking any trade until we see price come over here, come all the way down here again, and then we're going to be executing a buy position around this area. I don't know when it's going to be, probably tomorrow or Tuesday. All right. So guys,
Hey, Jamal.
yeah.
Say inducement, that's the same thing as liquidity?
You know what?
Just to make sure.
Inducement and liquidity is a little bit different, basically. Inducement, liquidity is when they taking the traders out of the market. And inducement is when they create a fake area to trap the retail traders who don't know what's going on in the markets. So literally, this is how it is. Let me show you guys here, okay? This is the difference between inducement and what do you call it? Liquidity. Like the market. Yeah. So right? Let's say the price is going up, created a low high, and then break this area of structure, right? So once the price created this area of breaks this area of structure, usually our demand zone supposed to be in between this higher low and this area before the break of this structure, because there has to be there was a supply that was in control until price took over this area. So there has to be some type of demand zone that created the break of this structure. So now the price is going to come down, create a mini higher low, and then it's going to go up. So now what's going to happen is a lot of traders, they're going to think that this is the valid demand zone, and the price is going to come over here. They're going to put their order here. Retail traders put their order over here, but they think the price is going to continue from here. But now what the price is going to do is it's going to go a little bit up, create some type of fake move, and then come down again, take out all this area, this area of liquidity, because they created an inducement. And now when they create the inducement, which is this higher low here, and then people started buying from here, and they put their stop losses down here, right? So once they put their stop loss over here, this is a liquidity. But this area here is what we call inducement. And the stop losses that go below the area of the inducement where the traders put their orders is called liquidity. Is it very complicated?
No, I get it. So inducement is pretty much like the manipulation that takes place.
There you go. They manipulate the retail traders. They always create a fake area, fake support or resistance area, where most of the traders think that the price might react to that area, which usually it reacts to the area, but it doesn't continue. It does a little bit of reaction, and then it plummets to the downside, and then take out all their liquidity, and then usually price reverses from area of demand zone with imbalance. So the demand zone and the supply zone has to have imbalance. Imbalance means there are orders that are sitting there that needs to be filled. Like for example, okay? For example, this is more than I was supposed to be doing. But anyways, we kind of exceeded the 30 minutes, but I'm just going to show you guys, okay? So let's say this is what the market does, okay? Everything is balanced right here. Okay, the buyers and the sellers are both happy and they buying and selling on an equal price. So buyers are entering from here, exiting here, sellers here, exiting right here, and then buyers are doing the same thing until price breaks out of this zone. And now this creates an imbalance. Okay, this was balance, this is imbalance, and now the market has to come back to balance the price. And if they don't do that, the currency is going to basically go into, the economy is going to go crazy because they have to imbalance, balance, and then rebalance in order to keep the economy in good shape. You see what I'm saying? So whenever you see the price breaking a structure, it always leaves some type of imbalance before it reverses. Okay? It always leaves some type of imbalance before it leaves this area. So price consolidates, breaks structure, goes all the way up, creating an imbalance, which is an expensive price. And then the big players, basically, they don't want to buy it from here because it's very expensive for them. So now they have to wait for the price to come back all the way down here in order to get the price cheap. So they have to enter the market as a discounted area. Okay, they have to find a discounted area where they can execute their trades and not lose money. So this is a area where they always watch because this area has an imbalance and it has orders that are sitting over here. When they enter here and they created this move, they leave orders here, and when the market comes back again, they can continue to the upside and then create another high. And when they create another high, now they create, there was balance, imbalance, and now they're going to come back again, fill the imbalance area again, and then continue. So there is imbalance, there's balance, imbalance, and then rebalance. Do I make sense?
Yeah, 100%.
All right. So this is the cycle of the market anyways. The market always, 70% of the time, the market consolidates. It creates basically some type of balance, which is a consolidation. And then it creates a move up, which is an imbalance, because the move up always creates an imbalance. But those who created this big move, they leave a lot of the orders somewhere here. And when the price comes back to rebalance the area, they fill their orders again, and then they continue to the upside. So this is exactly how it is, guys. Well, thank you very much for tuning in. I'll probably post this video on YouTube. I'm not used to doing this Zoom calls, weekly Zoom calls, since I started trading for a while. So I'll probably continue doing this, and I want to, basically leave a legacy, and I want to educate whoever I can, and, give back to the community again, and, contribute. It's not always about the money. It's always about helping your fellow human beings, seeing people succeed. And at the end of the day, there's enough money in the markets, and we can all make it, so let's all, be successful and just make it, and never give up, guys, never give up, guys. Just keep trading and keep doing what you're doing, okay?
Thank you.
You're welcome, bro. So anyways, thank you very much, guys. I really appreciate it. I see someone asking here a question, sir. Which person are you mostly trading Forex market, and which time zone are you trading mostly? Okay. Usually I trade GBP USD and gold. I might end up adding US 30 to my list pretty soon. I'm already back testing it. So if I see that I can trade US 30, I'm going to continue. I'm going to add US 30 to my list. So, and then later on, maybe get rid of GBP USD because of the volume and the liquidity that it has when it comes to US 30. So right now I trade GBP USD and gold USD. And the time zone that I trade is the New York session time zone. Remember, guys, the market moves, the market basically operates 24 hours a day, but there's no liquidity within all those 24 hours. There's only limited liquidity around those 24 hours. So if you are a trader that trades a London session, trade 2 a.m. to 2 a.m. Look for trades between 2 a.m. to 5 a.m. Eastern time, and always set your chart to New York session, okay? Always set your chart to New York time so that you don't get confused. I live in, Midwest of the U.S., but I set my chart to New York so that I don't miss a trade. You see what I'm saying? So always set your trading view chart to Eastern time, UTC Eastern time, which is New York time, okay? So I trade GBUSD, Gold USD, and New York session. Because for me, 2 o'clock in the morning, I cannot do a trade. I mean, When London opens over here, it's about 2 o'clock, 2 a.m. in the morning. So 2 a.m. in the morning, is when I sleep. So I'm not gonna be very, I'm not functioning at that time, basically. Okay, guys. All right. So any other question before I go? Any other question?
That I can think of, no. The imbalance, balance, or it's balance, imbalance, then rebalance, right?
That is exactly what the market does all the time, guys. That's what the market does all the time. Like you can see it right here. Let me show you. Like, you see what's going on over here now? Let me show you here. Let me show you. Let me show you something very quick. You see this area? When it comes to consolidation, a lot of people, they kind of get confused with consolidation. This is very important. This is a jump, something that's very important that I want to give you guys, okay? This is a consolidation, guys. And the reason why I call consolidation is because you see the V formation. Anytime you see a V formation, is basically balance and then rebalance, okay? So let's say the market just broke this structure, come all the way down here, created a V shape, and then went up. This is basically enough. Basically, this is equal buy and sell. So sellers sell from here, exited here, buyers entered here, and then they exited here. So they basically traded a fair price. They took the trade from here, brought it over here, buyers took it from here, and then they brought it back to area of where the sellers sold from the market previously. So there was imbalance and then a rebalance. And then when we get this break of a structure again, what happens after that is the market was balanced, buy from here, exit here, sell from here, and then exit here. So once we break this area of a structure, right away, price creates an imbalance. Once we take out this area, price creates imbalance. So now, those who are basically selling, they don't want to sell from here. This is too expensive for them. Because if they sell from here, the market is going to reverse, take them out, and then the market is going to go back to an area of imbalance and then continue to the downside. So big banks and institutions, they never take a trade here. They never do this. They enter a trade from here and then they just continue. And once they exit, they wait again. So all these small moves that you see, it's not the banks. This is the retail traders. This is small money right here. This is not big money. All these doges and, because there's not a lot of volume over here. You can see it. But when they're trading, there's always big volume. Like, look at this. Always. You can see the big candles. You can see the big candles, and then they cashed out. All the way come over here, and then cashed out, and then enter here again, cashed out, and then they just exited. So now they wait for the price to come back to an area of imbalance, which is right here. You see how there's an imbalance going on over here? The low of this candle and the high of this candle are not touching each other. So therefore, there is an area of imbalance after the break of this structure. So the market will always gravitate back to the imbalance in order to continue to the downside. Okay? And now, once they see the price going back to this area, they're like very excited. They see, wow, okay, now we have a lower high, and then we have a lower low. And then they see, wow, okay, now they're trying to come, buyers are trying to come back again. They're trying to rebalance the market. And then they went all the way up here. And then once the price reaches over here, they go to the lower time frame, like the 3 minutes or whatever it is, or the 5 minutes, and then they execute right away. So with the high, big orders, you can see how, strong the movement is. Once the price reached over here, what happened? You can see the pressure right away. This was a bullish candle. So they pressured it right away. Right away they pressured it. And then big movements, and then price continued to the downside. And how many pips was this? This was about 74 pips. Imagine if you're trading 100 lots, 200 lots, or 300 lots, or even billions of dollars. This is a lot of money. So remember, the big banks and institutions, they don't want to lose a lot of money, because whenever they lose money, it's always big. And they always try to minimize their losses. They're very, very critical when it comes to their losses. Anyways, guys, thank you very much again. I'm going to post this video on YouTube. Thank you for tuning in. I think most of the people that are connected to me are sleeping right now, because I have a lot of people from Africa and Europe and all that stuff. So they're sleeping. So I'm gonna go ahead and post this video on YouTube. Thank you again. Until next time, peace and love.